Yes,
Good
we are.
morning, everybody. So, good morning, Pushkar and Vishnu. Officially, even though we had a
Good
discussion
morning.
earlier behind that. Right, good morning. So we are live, and I guess people are flocking in. So yet another session, and this time we are like shifting sides. Earlier we used to always talk to people on investment perspective, or the jargons, the due diligence, and the other aspects of it, right? We also got Prakriti last week to discuss about the legalities or the other technicalities around it. So this week we thought we'd make a change, and we thought we'd bring in a founder to talk about how to grow the D2C brand to the level where we can sell it or exit out of it, right? So we have been talking. So Pushkar has been talking to Vishnu for a long time, and impressive chap. Started off churning business and making money at the age of 13, right, Vishnu? So like we are like floored by his achievements. So when Pushkar said about Vishnu, and we had hi Vishnu. So we have a Vishnu
Hi,
here,
hi,
Vishnu.
Jolos.
Right.
Oh,
So we have been talking about last week. We got a chance to talk to each other, and he's shared about his experiences, and that is like brilliant. And I thought we should definitely get Vishnu here. So we cleared the schedule, and we thought this week we get Vishnu here. So a little bit about Vishnu here is that, as I told you, at the age of 13, he started working. Created a digital marketing agency, scaled it up to enormous level, got acquired, and then worked with the company which acquired that agency for a while. Then he started off another company, which was into healthcare, pharma business. That he again merged it into a different company altogether. Then again started a digital marketing agency, which is doing extraordinarily well. In fact, he gave us some interesting tips and insights on how they do function and how they scale fast, right? And meanwhile, he also started a D2C brand. In fact, they have a couple of brands coming in the pipeline. I think I'm sure we should be sharing generously on the numbers and the figures and all the stuff, and how he managed to do it. More importantly, how he managed to do it. And also, he has got something new called Super Cluster Pi, so he'll again talk about it later. So, Vishnu, you might want to tell about your current projects. Maybe, I mean, of course, the history is so long, and it might take the entire hour to talk about
of
it.
course.
But
I'll
maybe
just
what
take
you're
a
working on
minute
current.
maybe to give a
Yeah,
brief
over to
introduction.
you.
So,
Over to you. And welcome,
yeah,
man.
now I run Supercluster Pi. Superclusterpi.com is where all of you can see what are the brands that I'm currently running. So, got into D2C close to a year ago and launched our first brand 7 months ago, which scaled to more than 15,000 customers within 6 months of launch. Then also have launched a couple more brands, one in the hair growth, one in problem solving skincare, and one in the stress and sleep space, and another in the vegan protein. So these four brands are live. Anybody can visit superclusterpi.com and check out what these four brands are to know more. And I come from the digital marketing background. I've started my first agency when I was 13 and moved to the US, spent 4 years there, uh, did a lot of different things, led acquisitions, led marketing, led strategy for a subscription consumer internet business. Then in 2016, came back, co-founded an e-pharmacy, uh, then merged it with a local chain of pharmacies in Coimbatore. Then started my agency again to build and bring back some cash flows and grew it to a reasonable size, a 70, 80 member team. Now all of them are working remotely, got into D2C, and this is where I am. We are now having a few more launches in the pipeline and also are in talks with brands and D2C businesses in the health, wellness, and beauty space to acquire and integrate with the HOB that I have set up.
Interesting stuff, Vishnu. I'm pretty sure you're going to really help us with a lot of insights here, in the session for our viewers. We already have like about 100 odd people watching us, right? This is like a mega hit already. When we said the founder of a serial entrepreneur is going to come, I guess people are like really looking forward to some tips and tricks. So please be generous and open, right? So over to you, Pushkar. We have
Anytime,
some
of course.
questions to start with. Like always, the sessions is very simple, Vishnu. We have some questions which you have formulated in our mind which you want to ask, right? Making the life easier for the viewers. And at any point of time, if anybody wants to ask a question, you can do that in the comment section on LinkedIn or YouTube, right? It's also live streamed on YouTube. So you can ask in the comment section, and we will pick the question if it's relevant to the topic we're discussing at that particular point of time. If it is not relevant to that particular topic, we will ask them in the later stage, probably at around 12:30ish. We will wrap up our questions and we'll jump into the questions which people ask, right? And and we'll Vishnu hopefully will address everything for us. And if we have time, we'll come try to address all the questions. Otherwise, we will probably put all this, consolidate all these questions and share with Vishnu, and maybe Vishnu can answer it maybe on a LinkedIn recorded video, something like that, and then publish it. So we'll work on that later, right? So Pushkar, over to you, man, the man of the hour, to start firing
Eh,
questions and make Vishnu uncomfortable.
no, no, thanks, Delos. That's not the idea, Vishnu. So don't like just to set the ball rolling. I just want to understand like why all of a sudden there is so much buzz about D2C brands in India. What's happening that all smart founders want to build a D2C brand?
So, if you ask it from my perspective, I think India is going through a huge growth curve in terms of digital adoption and digital consumption after Geo. And the per capita income is also growing above the $3,000 threshold, where they can start to afford uh, products that are of a slightly higher value. And any digital business or a brand has certain costs incorporated, and any D2C brand can't successfully sell products priced below 100 rupees on the internet, because there is a logistic cost, there is a payment processing cost, and there is a COD charge. And so, which means D2C is applicable and possible uh, and easy to do if the average ticket size is more than 500 or 600. And now, as Indian consumers are there willing to spend and address their problems they have, and are getting more aspirational, trying to buy brands rather than unbranded products, there is this huge opportunity. And of course, the key drivers have been Flipkart, Amazon, and the large marketplaces in the country who have demonstrated that kind of potential. And if this is going to get 10 times bigger, and from Avengers to everyone writing case studies and you know reports on $100 billion is going to be getting generated by the D2C brands by 2026, then all the smart founders would want to jump in and chase that number and achieve the best that they can, right? So why not?
Interesting. So Vishnu, also I've also seen this unique stuff which is happening. It's a follow-up question to the question, right? I've seen that of late, in India, you know Instagram-led companies, organizations are sort of coming up. Like there are a lot of indie brands which is available only on Instagram, or acquiring customers only through advertisement on Instagram, or selling products through their Instagram pages, but not available on marketplaces, Amazon and Flipkart as well. So I guess this, I mean, I'm calling them indie brands. I mean, no offense to anyone over there, but have you seen this trend picking up in the industry? I mean, like since you are always monitoring the industry, so you might have seen it. Is it a growing trend, or is it just a fad? Or it's just there.
It's of course a growing trend, for the very reason being the community of people spend a lot of time in Instagram, and there are a lot of key influencers, whether they are beauty influencers or health influencers, that common consumers do follow and look up to. And these influencers or product first founders who work with these influencers are taking the brand to masses through Instagram, and through a personal review or a feedback or a recommendation kind of an advertorial, there are so many brands that have grown by leaps and bounds. Not only brands, even course creators who sell content over different platforms, right? Like on uh, anything
Hmm.
for that matter, how to scale a D2C brand,
Hmm.
how to lose 10 kgs of weight within 15 days, and or any product first founders, like if you even take a brand Dega Organics for that matter, significant traction has been achieved through Instagram as a channel, with the stories, the content, the reels that they create. And not only
Right.
Instagram, also YouTube has evolved. And if we see the success and scale of large brands, like large marketplaces and brands that sell in marketplaces like Nika, is they've created a lot of content. And now Good Glam Group is acquiring multiple businesses that are generating this content in YouTube. For all long tail keywords, people will go and search how to do this type of a makeup, and then you have an influencer or a content creator do content and recommending the products that you have to sell. So these are all good ways, established ways, organic ways to drive
Right.
traction, and they will be there forever to stay. And as long as people look up to influencers for their purchasing decisions, and they spend a lot of time on Instagram and YouTube as a channel, these brands will continue to gain traction, and these businesses and product first founders will continue to grow.
Right. I hope our host is there. Pushkar, you there? Okay, I don't know if Pushkar is around because Pushkar has been facing a lot of internet problems of late. He's based out of Patna right now, and internet is pretty bad. I mean, this is funny though. You said, after Geo, the scenery has completely exploded, but off late, what you're seeing is that all the network is going to shambles. But again, that is a different topic for a different discussion altogether. We have a couple of questions which already popped up. Like Abhay is asking how to build Amazon agnostic D2C business. Now that is what do you call it? That's something which I mean, we were just discussing, right? You want to add some thoughts onto it? I mean, can it be Amazon agnostic? Amazon Flipkart agnostic business, D2C business can it exist, in your opinion?
Yeah, of course. See, even within Amazon, the growth has fundamentally been driven by third-party sellers and brands, right? So if you genuinely ask, while Amazon is doing their own micro brands in different segments like a Solimo or Amazon Basics or whatever,
Right.
the scale and success of Amazon is not just dependent, but is also because of the third-party sellers and brands that are successful selling through Amazon. Now you take off a boat or a Mamaearth or a Wow or any popular brand selling in Amazon, Amazon is bound to lose significant market share or significant sales rate. So they are marketplaces and they offer an opportunity for product first and brand first founders to build their brands. And yes, any business has to be agnostic when it comes to marketplaces or platforms and not be too dependent on one. If anybody is too dependent on a certain marketplace, it gets too visible. Now it's not that difficult for me to go and check out which seller makes how much money in Amazon. There are tools like Helium 10 and any number of tools that are available where you can get this intelligence that can approximately give you a figure on how much sales a particular brand is doing. So being too dependent on Amazon means you are vulnerable as a brand, and somebody else can come and try to replicate what you're doing. And if you don't have that moat or that customer connect, you will start
Mm-hmm,
losing the customers to the other brands. They might start
mm-hmm.
selling the same product at a cheaper price, and
Right.
if that retention effort is not undertaken, then you will lose out. Whereas if a customer is also buying in your platform, so it is fair to have a brand generate half of the sales from marketplaces, but at least half the sales coming from their own direct channels, whether it is sales happening through their website or through their Instagram or their connections that they have with their existing customers repeat.
Mm-hmm,
But doesn't matter, but that is
mm-hmm.
more sound strategy to adopt and to build brands. And in fact, even though I'm a great fan of boat as a headphones, there is much criticism across Twitter and LinkedIn that significant portion of their revenue comes from Amazon. And
Mm-hmm.
tomorrow, what if Amazon starts favoring or siding some other brand selling headphones and speakerphones, the same
Right.
segment they are operating in, right? So
That's a concern, of course, right? Just one quick follow-up question, if you don't mind, is that Jatin has asked over here, right? Should you focus on a marketplace or a non-website? And specifically when you're launching a D2C brand, would you start? I mean, as a founder, as a serial entrepreneur, where
see,
would you start?
depending on what kind of a founder, right? Like I'm a digital first founder, right? Like I
Mm-hmm.
focus on scaling the brand and branding it so well that there is enough customer affinity and the customer comes back to me again and again and clearly distinguishes between my brand and my competitor's brand. And there are multiple levers that goes into this brand building and digital scaling sustainably. And because I know this, I aim to have 70-80% sales from my own website and the direct channels that we have, and only 20-30% from marketplaces. But it also depends largely on the founder. If a founder is coming from a product first background where he deeply knows how a certain product works, and that he can produce something that is of superior value and quality, uh, then they have to start with marketplaces because that's an easier way to get started. And once they get enough traction and once they can afford to put together a quality team to do their brand building and to do their uh, digital performance marketing and scaling their transactions there, they should adopt that.
Right. Ashwin, you're not alone, man. We all are having the same internet problems. We have recording this live on, you can find it on LinkedIn Live later on as well, on Pushkar's profile, and also on YouTube on Remish Capital. We have all the recordings over the live session. So, we are all facing the same problem and we are all fighting for network. So, Pushkar is back and he has the questions. Pushkar, over to you, man.
Sorry about my internet. As Dolo said, we are all in the same boat. And by boat, I don't mean the boat brand, but in general, we're all having this problem with the internet today somehow. So I think Vishnu, one question for you, since you come from both a digital marketing background and also D2C background. Now, how important is digital marketing for young brands? Say you're just starting up. Now, how do you acquire customers? How do you reach out? Is digital
See, it
marketing?
depends on at what phase they are in, right? Like if they are at level zero, they are yet to get their first 1,000 customers. Then I
Mhm.
believe the first 1,000 customers should be a consequence of hustle, not digital marketing. They have to get the product market fit. They have to get their product distributed through their friends and family, and they have to make a product that their friends and family and their immediate community really loves and enjoys, so that they would recommend their friends to start using them, and at least get to a first 100 or 200 customers, and at least have 50 out of that 100 customers buy that product again every month if it's a health, beauty, or wellness product, right? So the segment that I am operating in. And once they demonstrate this kind of a potential as a product first founder, then it means that the product has the capability to command a certain value or a premium. Now, there are two kinds of products that any entrepreneur can find and sell. One kind of product is what typically drop shippers do. A drop shipper meaning somebody who imports something from China and sell it in India, right? Where it is equivalent to that of a commodity trading. I am importing a anti-theft backpack and selling it in Amazon for 600 rupees, and I am getting it at 300 rupees. Somebody larger than me is going to import 10 times more and start selling it at a 500 rupees. So I will forever run into a war with other drop shippers because there is no product moat, there is no product differentiation, right? I'm a simple drop shipper picking up something from a contract manufacturer or somebody in China and then listing it in Amazon and selling it in India. So this is not what I would call any D2C brand as. This is not a brand, it's a trading business. So if a new founder is starting and they have some unique skill sets, they can produce a product that is of worth whatever category that it may be. They should start out with their friends and family, and they should get a product market fit. And once they have a few hundred customers buying their products, then they can list it in Amazon and some of the marketplaces where it's relevant for them to start selling. Like sometimes it could be Big Basket that's more relevant than Amazon. Sometimes it could be Nika that's more relevant than Amazon, right? Because these are niche marketplaces where consumers of beauty, consumers who buy groceries dwell, right? And if you're able to crack these deals with these marketplaces, of course, initially as a new brand, founders need to understand they need exposure and they need to be flexible in the kind of terms they negotiate and get into with smaller marketplaces or niche specific marketplaces and get the higher placements and get to the first 1,000 or 2,000 customers repeatedly buying, or from a revenue perspective, scale the brand at least to a level where it makes 5 lakh or 10 lakh in revenue per month. And as soon as they hit that kind of a number, then going and hiring and getting a good digital marketing agency to set up a good website, set up good marketing automation to engage with the existing customers and get more orders, and get started with your brand building exercise. All of this can begin, because to start with, if any founder is to choose without much capital investment or without a product market fit, then of course all their investment is going to go end in vain, or their investment would not be good enough to get them up to the mark where they can start scaling self-sustainably.
So I think it's amazing you spoke about product market fit or PMF. So that is what we always advise to founders who are looking to raise capital. That first get the PMF and then think about raising venture capital. Now you said acquiring, maybe selling it to 1,000 customers, first 1,000 customers to achieve that PMF, that whether your product is good enough or not. Now, how do you advise founders doing that? Should they do it through a website? Does it make more sense to just use WhatsApp, SMS for the first
I would
1,000?
say the first 1,000 use Instagram effectively, use YouTube effectively, work with content creators and influencers, let them try your product and create a product that they will love. And of course, use your network and use your connections, reaching out to them, having them use the products, and then go to marketplaces. The first 100 and 200 can come from your own connections and network. The first 1,000 can come from marketplaces. So this is a ideal way a founder can move forward. So this is the most common way that is recommended advisable for most founders to begin with. So if somebody is asking, then why am I not doing it? Because it's an altogether different scenario for me. I come from a digital marketing background, and most of the brands that we set up, we put several crores into it on day one. So if founders do have access to that kind of capital and resources and bandwidth and knowledge, then they can do it this way. But if they do not, as a common founder beginning from the scratch, trying to bootstrap his way forward, this is the way out. And the guy who bootstraps his startup will be far more sustainable and far more successful in the long run, because he would have worked his way up to get the product market fit. Whereas even a founder like me, we are not product first, right? We try to get the PMF eventually, and we try to launch if at least 70% of our customers love our product. So we test it with 100 people, let's say, for instance, and if 70 of out of 100 say they like our product and they'll buy it again, then we'll launch it in the market. So this is our way of evaluating product market fit, as we tend to be a very customer centric company. Customers are the ones who have to say whether they like it or not. And if customers feel they like it, they'll consume it and they are getting results from it, then we take the product to the market. So product market fit is not about whether five people tell it is great or whether you believe it is great. Every founder believes their product is great. This is given. Whether 70 out of 100 real customers who you do not know believe your product is great is what I, in my terms and ideology, will call as product market fit.
Just a quick follow-up question, actually. Over here. Sorry, Pushkar. So Vishnu, let's take one of your brands which you've successfully made in the large one, right? Like the natural infusions, the hair serum part, right? So tell us how soon did you reach the first 1,000 customers? Like how much time did it take? And from 1,000 to, let's say, a sizable, like you said, 4 or 5 lakhs per month revenue, right? That is a battery you said, to make it successful, and then invest on digital market,
See,
right? So how long did it take for
for
you to reach that stage?
for us, it only took 1.5 months, because we
Okay.
already had the playbooks. We already were doing this for several other clients.
Okay.
We have managed more than $20 million in ad spends in the last 10, 12 years, and we've managed
Mm-hmm.
more than $100 million in revenue as an agency, right? So we had a playbook. We had the GTM strategies on what we will do, and we were very focused in our approach as well. And
Mm-hmm.
we scaled that brand extremely sustainably. From that perspective, what I say is I've only invested like 7 lakhs into the whole company. Okay.
Wow.
And I haven't invested a penny after that. The brand has grown sustainably. We are getting a very good return on ad spend, and I think those are the questions that Pushkar will anyways be asking me. Will give an answer there. And uh, and it has been very sustainable for us. Getting the 1,000 customers was 1.5 months, and getting 10,000 customers was like 5, 6 months for us.
Right. Robin Chopra has a very similar question. Anyways, Pushkar, just bring it to your notice. Maybe you might want to take his question while you're asking relevant questions, right?
Yeah, right. So I was going to ask Robin's question about ROS, but before that, since like I have two questions before that, before we move to ROS and website sale. So one is, I think Ankit has a Ankit has a question since we are talking about PMF. So I'll just show it over here. So how do founders know that they have achieved PMF? Since you talked so much about PMF, what's your take on that?
My way of measuring it is at least 30 percentage month on month retention, and 70% of the first time buyers liking the product, and less than 5% returns.
Okay. So when you
Wow,
say
that's very well structured indicators, like APIs. Wonderful.
right. No, but one follow-up question then. When you say 70% buyers liking the product, how do you define that? How do you define?
We have a customer support team who calls every customer 2, 3 days after they receive their order to check whether they like the product.
Okay, so it's a way to measure customer feedback. Calling up
Yes.
customer, and then so do you call up all the customers, everyone who has bought a product?
So far, yes.
Wow, yeah, that's awesome. Now
That's a
just to
good standard
follow,
of customer service, huh? That's pretty awesome, actually. And plus, I guess, Pusher, we should also not forget that you're talking about the first 1,000 customers. So that's not a huge
Yes,
investment in
that is
terms
right.
of time and
So
resources.
I don't call, after a brand scales beyond 10,000 customers, we only call the, what do you say, top 20% of customers, because they are really important for us. But for the first 1,000 customer, every customer is important, and every customer has to be communicated with. And I personally called and spoke to several tens of customers in some of the brands that we are launching as a
Wow.
founder.
Yeah, that's awesome. Must
And I
have been.
take the product in my hand and give it to people wherever I go and meet them and collect their feedback in real time. So there has been cases where I didn't launch a brand or postponed it by 4 months or 6 months because I or one of the people that I gave the product to, few of the people that I gave the product to didn't like it.
Okay. And then what did you do if they when they
Go
didn't like?
back and build a product that they will like and wait for it to happen. If it ever happens, launch it, or else just better shut that idea down and do something else. Right.
Yeah. Yeah.
So
I think you are quite an honest founder.
yeah. See, I cannot just jump up and down saying this is my idea, this will work, this is great, and all that. If people are not believing it, if the market is not believing it, why do I call it product market fit? If the market is not believing it, if the market is not willing to buy it, if the market is not willing to accept it and repeat buy it, then I'm more a rational and a logical founder than an emotional or a aspirational, ambitious founder. Ambition has to go with rational and logic, right? Like if there is no logic and rational, then growth and ambitions can only be fed with luck and not logic. And
No, I totally agree. So you said something about customers believing in it, believing in your product. Now, my question is, how do you make your customers believe in your product? Of course, number one is you build good product. That's a given. I think that everyone understands. Now, say I sold my first 100 products through my friends and family, through my network. And then, as you said, I launch it on a marketplace. Now, all marketplaces in India are extremely crowded. So, how does a new brand stand out on a marketplace? Do you run campaigns? What do you do?
yes, as soon as you put the brand on the marketplace, ask all the people who you have given your product to go and review there or continue placing their orders there. I mentioned that if to get your first 100 customers through your network, out of which 50 repeat buyers, ask them to place all the repeat orders through the marketplaces. If you're having 50 reviews in any marketplace, let's say like Amazon for a product that you're doing, you will start getting some traction. Okay. So Amazon itself will start showing a product for some of the keywords that you're operating in. Let's say you are doing a honey or you're doing a turmeric powder that is so unique and different, right? And if you're doing a forest honey and if you have 50 reviews and your product is priced reasonable, then you will start getting some tractions and organic orders. Every one of our product that we have listed in Amazon after it has 50 reviews, without any advertising, without anything, we are getting 5 orders a day, new orders, organic, right? So it just shows up for different keywords and you start getting orders. And then you can start running advertising campaigns within Amazon itself,
Mhm.
targeting a few keywords that describes your product best, and go forward based on that, reaching out to a wider audience searching for forest honey. If you appear on the top and have 100 reviews and have a good description about your product, a lot of people will give it a shot.
A quick follow-up, if you don't mind, Pushkar. Do you do also affiliate marketing or influencer marketing for your products on Amazon? I mean, and link it to Amazon.
We have actually done a very large scale influencer marketing exercise, but that was not to generate sales. That was just to put the product on the hands of as many people and get their feedback and reviews. It was
Mm-hmm.
more of a PMF validation exercise that we have done. And now we are planning to start a proper partnership led influencer marketing drive or an initiative where we will give a commission to the partners who are promoting our products. But what we also find is that influencers are not really interested in commissions, but people who are already reselling in Amway or Herbalife or through Meesho or a Mom's Presso or whatever network marketing platform, they are very interested in commissions. Then they already have a network of people to whom they can sell the product to. So we are
Right.
trying to crack that network marketing chain and get them to start selling through the digital channel. But they don't send the traffic to Amazon. They send the traffic to the website where we can track, we can attribute a commission, and we can
Right.
give a commission and build a lot of tech around it as
Right.
well. Yeah.
Just to add something onto it, Tremis recently, took partnered around with a company which works on tier three and correct me if I'm wrong, Pushkar. I think the rural area they are like social media network sort of thing for the rural area, and the numbers are mind-boggling. The amount of people who are appearing in this thing, and small value products, but like for example, a hair oil or anything like that, right? A small value product, but a lot of people are seeing it. A lot of influencer network, people are subscribing to it and all this stuff. So there are a lot of like you mentioned Misho. I don't think not many people think about Misho as a platform where they can actually try to sell their product. I mean, just not Amazon, because everyone talks about Amazon and Flipkart, but then there are a lot of other opportunities hidden, in a lot of areas, and regional wise as well. We have a lot of platforms where we can generate sales, right? Anyway, so yeah, over to you, Bushra.
No, you are totally right, Duluz. I think tier three is where the like a lot of future lies in India, at least on the e-commerce side. Now, Vishnu, I had one question on ROAS. How do you take that?
See, that is again a very subjective question. ROAS is return on ad spends. If you put 100 rupees and make 200 rupees in sales, that is a 2x ROA. And an ROA can be defined in multiple different ways. One way is the plain vanilla attribution, where uh, Facebook itself shows you what the ROA is from the ad spend you are doing. But that same Facebook does not track the sales that comes through your Google. Somebody might see a Facebook ad, go to Google and search my brand name, and then buy the product. Because of Facebook, I am generating that sale, but it does not directly get tracked. And because I am advertising in Facebook, somebody might tell this brand to their friend, they'll open my website directly and place an order. That does not get tracked in Facebook. And only because I advertise a brand in Facebook, they get to know about the brand, and they repeat buy my product for the second time, third time, directly visiting the website. That does not get tracked. So that is called as a blended ROA. If I'm spending 5 lakhs in advertising and I'm getting an overall 10 lakh sales in a month in a particular platform, then my blended ROA is 2. Maybe my directly attributed ROA is only 1 if I get 5 lakhs from the people who actually click the Facebook ad and transact. For me, I would advise founders to look at blended ROAs in order to make rational, logical decisions as to what they will spend. And what you have to also keep in mind as a founder is, let me share the screen. So I actually have made a spreadsheet that I would be more than glad and open to share with all of you here who are taking part in this live stream. Even if you get a 0.5x ROA, actually speaking, 0.5x ROA is not a good ROA. It's a very bad ROA. The bare minimum I have set as a target in my own company is a 2x ROA. But what you all have to also understand is that the CPMs, the cost to advertise on the internet, was 4 times lower before 4 years. It has increased by
Right.
4 times in the last 4 years. So many unicorns, they're all trying to target the affluent Indian consumer. And ad spends will continue to increase, and it will even increase 4 more times in the next 3-4 years. So, as an entrepreneur, as a founder, everybody has to brace themselves for that. Okay, you can even scale up a brand sustainably, uh, even when you get a 0.5x ROA, when you achieve a month on month repeat of 20%. Okay, if you are able to create a product or create a brand, let's say we are trying to create a protein powder, vegan protein powder. Our target is that we should hit 75% month on month repeat, because there have been multiple brands, whether it's a Muscle Blaze or a whatever Vega in the United States, and in the whey protein side, multiple businesses, right? Optimum Nutrition have demonstrated 90% retention. People who go to gym, they go to gym, and people who buy a protein powder, they repeat by that same protein powder. And brands launched by a HUL or a PNG or a Reckitt Benckiser, they have a 90 to 99% retention rate. Let's say toothpaste or Surf Excel, people buy that again and again. Or a oil that they use for cooking, right? Like a Fortune Refined Sunflower Oil. So you can achieve significant retention rates. It's a matter of how good the quality of the product is and whether the price points are affordable for the consumer that you're reaching out to. So if a founder can achieve 20% month on month repeat, then they only need to invest 1.3 crores to create a business that will do 65 lakhs in monthly sales. So let us assume that the founder only has 13 lakhs to
Vishnu,
burn.
you'll have to zoom in a little bit because it's not visible for everyone.
Oh,
This it's
okay.
pretty small, right?
Got it. So I am zooming in here. So if a
Mm-hmm.
founder only has 5 lakhs to invest, even they start with only 5 lakhs in ads, overall they
Mm-hmm.
have to only burn 13 lakhs in order to make a brand that will do 6, 7 lakh in revenue per month, which will be self-sustainable from 7th or 8th month. So
But that's also
ROAS is a
considering the retention rate you're mentioning, right? Like,
yes,
30%
considering a
plus.
20% retention rate. In fact, brands should aim for a 40%, 50% retention rate, and they should do a lot of things to get to that retention rate. They have to have a loyalty program. They have to talk to their customers more than anything. See, this loyalty program, this whole marketing automation is all very digital marketing specific, which any common founder may or may not be able to do. And this is more vanity also. In my real
Mm-hmm.
experience, the highest retention rate can only be achieved if the real founder or the founding team or the D2C brand engages with the customer, makes them
Right.
feel good, and understands the feedback and really implements it and services them through phone call and WhatsApp conversations that they are personally having. If they do this
Yeah.
two, three things that I said, which anybody can do, they can achieve a 40% repeat rate. And they can build
Right.
a brand within 6 months, 1 year, which will have 8 lakhs, 10 lakhs in monthly sales, which will be sustainable only by investing 10 or 15 lakhs. So this is if you get a 0.5x ROA. If you're able to get a 1x
Just
ROA,
to
then the
just to be clear,
business,
15 lakhs in ad spend, right?
yeah, 15 lakhs in loss
Right.
in net loss the business will generate 15 lakhs in investment, 5 lakh in ad spend to start with, and every month they'll burn some money. And if they get a 1x ROA and this kind of a repeat sale, they don't even need to burn anything, only 1.5 lakhs they need to burn to get here,
Mhm.
right?
Right.
So,
Right.
and ROA is not something that is going to be the same for every single brand. If your transactional price or the average order value is less than 500 rupees, then getting a high ROA is very difficult. But getting a
Okay.
high repeat rate is easy. So when we launched our first few brands, we priced them in such a way that our average order value is 1,000 rupees or more, because we did not have enough money to burn to scale the brands, and we had to have a higher cart value, and we compromised on the repeat buying behavior. A
Mhm.
consumer buying a Mama Earth products can buy Mama Earth every month, and a lot of consumers can buy Mama Earth every month because it costs 300 rupees, which is more or less the same amount of money or slightly 20 or 30% higher than what they used to spend on their shampoo conditioner earlier. Whereas if a customer has to spend 1,000 rupee, then it significantly takes a big hit on the retention rates. So if you have funding and if you have access to capital, and if you can, moving forward, some of the brands that we are launching for the mass market, we are going to be pricing them at 399, 499, knowing that our first ROA will be poor, but the lifetime value will be high because of the retention, which will be high. And anyways,
Mhm.
I'm more concerned and bothered about how many customers I can get to use my product and eventually uh, subsidize or subtract my acquisition costs over a period of 6 month revenue that I learned from that customer.
Right. Right. One follow-up to Vishnu, like Robin also asked this. Would you be sharing the sheet, or is it just like hide and seek?
No, it's not a I am sharing
So
this
I
sheet.
mean,
I have shared it in this link here. It is a shared based on the link. I have also
okay.
made the permission as anyone with the link can view. Anyone with the
Okay.
link can view, they can copy the sheet. Yeah.
Awesome. So I'll just share it on the chat for this is a personal chat, right? Or private chat. We will share it on the LinkedIn live chat later on, right?
Yeah,
Pushkar?
absolutely.
Right. Awesome. Thank you very much, Vishnu. That was like really insightful. I mean, for a moment you like I was completely felt like I'm going back to the school bench and listening out a very interesting concept. And that is a very nicely structured sheet. I think if you change the values, the numbers will change. The red and green will change automatically, right? It is linked.
Correct.
Right, that's useful, man. That's a great toolkit. Huh? Awesome. So, Vishnu, one question which is there is, what's your plan to, which is from Siddhangana here, is that what's your plan to scale your brand from 15K to, I think, 15K per month to the next one? I don't know, 15,000 customers to the 1 lakh customers. That's like a super duper scaling, right? Because customers you cannot
See
engage them on a daily
now,
basis.
now
Yeah.
my expertise in scaling from nothing to 15,000 customers is established. I want to address a few problems and get to 15,000 customers in 4 or 5 micro brands that I have. Okay. And 3 or 4 more that we will launch and we will acquire. And 15,000 customers as a brand means you already would be at a 20-25 lakh revenue. Okay. It will be sizable enough. The kind of bandwidth skills that you need to grow from 15,000 to 1 lakh means you also have to ask a question of how mass market you want to become. uh, at a 1,000 2,000 rupee price point, it's very difficult to scale to lakh and a million customers and whatnot, right? So as we grow, for me the immediate next target is to get to 15,000 customers in all the brands that I have launched, and get to that sizable revenue, and also raise some amount of capital and deploy that capital in going more mass market with some of the brands or product lines that we will introduce, with a much higher repeat rate, and invest heavily on customer centricity, and continue to grow to 100,000, a million, and even more customers. So it's a different ball game. It's a different playbook. In fact, we are new to it. Our expertise lies in growing from 0 to 15K, and going beyond 15K to 30, 40K might be pushed by an influencer led or a partnership led push or a content creator led push. But beyond 40, 50K means the brand has to talk for itself, the product has to talk for itself, that economies of scale should be there, and also the investment should be there. So if I'm willing to invest significantly, then I can get there. Investment means also burning quite a bit of money along the way until I have the kind of revenue and EBITDA to feed my expenses.
So just a follow-up question, Vishnu. When you said burning a lot of money for growth, now this is a very common trend in India. We have seen like every founder or every big startup, D2C, non-D2C, burning a lot of capital to grow because like you can grow quickly through marketing. But what is your take on growing without burning capital? Is that even possible, or it will take a lot of time?
Yeah, absolutely possible. In fact, out of the 7 lakhs I invested, also only 3 lakhs I ended up spending for the first brand that I launched. And 3 lakhs is not a lot of capital. I think any one of my team member can also pull off that kind of capital, right? So it is 100% possible that anybody can scale a brand. It just depends on the aspiration, the product market fit, their narrative, and the way they engage with the customers, and customers repeat buying with them. And it is also a time consuming process. I speak to a lot of founders. Just as a matter of fact, we are trying to acquire brands doing 5 to 15 lakhs in monthly revenue into our house of brands, whoever is in the health, wellness, and beauty space, and give them access to our team playbooks to grow 10 times, 15 times in the next 2 3 years, and also give a secondary exit to the founder. So a lot of founders who are starting, as a part of this exercise, I end up speaking to founders doing 1 crore plus revenue. I also end up speaking to founders doing only 1 lakh in revenue. So founders are largely impatient, and they are not investing enough in customer centricity and product market fit. They think the product they have is great, right? And they have to get over and beyond this perspective and thought that they think the product is great and that it has to work. And secondly, organically scaling a brand as a founder is a time consuming process, right? So we had access to playbook, so we grew from nothing to 15,000, and anybody having access to a network, a marketplace, a good connect, something can scale to 10 15,000 customers within 1 year. But typically it will take 3 to 4 years for a standard founder who is starting in D2C to achieve this metric, and it is still great. Today a brand that is doing 20 25 lakh in revenue uh, can easily get acquired. If they have a 30% EBITDA, can easily get acquired for like 4 crore or 5 crore. And if a founder is able to get to that level in 3 years and take a 4 or 5 crore exit, that's a massive deal in my view.
Interesting.
No, I think that's totally correct, especially with so many aggregators in India. Like now, founders
Correct.
have a great option. Not only like
Yes.
earlier they had only to grow the brand through venture capital. Now there's also an option to sell the brand, as you said, in 3 4 years.
Correct. And
Keep
even if
time check,
somebody
guys.
has 5
Sorry,
10
we
lakh
have 15
revenue,
minutes
smaller
more.
HOBs, absolutely. Even if somebody only gets stuck at 5 10 lakhs revenue, there are smaller house of brands like us who are willing to have a conversation and pick up if there is value, right? So along the way, wherever they get as a founder, whether they spend a year or two or even three, if they get somewhere, then there is going to be enormous opportunity and scope to cash out, to earn massive dividends as a founder. But they have to have that grit. They have to go in. They have to take that risk, and they have to learn, and they have to hustle all their way rather than sitting idle and waiting for sales to happen, right? So
This is for every founder, right? Not just D2C founder. Every founder
yeah,
has to do that.
correct.
One quick follow-up question, Pushkar, on what Vishnu said, right? Vishnu, you said specifically health, wellness, and what was the third one? Health and wellness is
Beauty,
primarily what you're
beauty,
focusing.
health,
Beauty,
wellness,
right?
and beauty.
Beauty, right? So why this? I mean, you can always have D2C in different segments, right? Why health wellness? And I saw that all your brands are primarily into health and wellness space, right? So why
So
do you
first we
choose
have to
this?
do one thing well and then aim to do all other things. Okay,
Or
focus
is
has
it
to be
because
there.
health and
Secondly,
wellness is a low ceiling?
my experience in this last 10, 12 years has been in dealing with health, wellness, and beauty related brands
Right,
only.
right,
And also, my experience has been largely with subscription led consumer internet businesses, which means I understand repeat buying better than one time buying. A mattress is bought by a customer once or twice in his life, all right, or a t-shirt is bought once a year, a watch or a bag is bought once or twice or even 5 times a year, whereas
right.
you know your dishwasher liquid is bought every month, your toothpaste is bought monthly, even twice, and all the products that I'm doing recurs almost on a monthly basis, right? So the reason for this is the repeat buying playbook is very different from the single
Single buy.
transaction and a purchase playbook. And single purchase and transaction playbook is largely dependent on marketplaces and the visibility that you can get in marketplaces, which is highly vulnerable. Today it is there, it may be there for one X brand, and tomorrow it may be there for Y brand, and highly competitive as well in nature, and very very difficult to sustain in the long run. Whereas once you get enough customers into your own platforms transacting and buying your product on a repeat basis, making the repeat buying seamless is another point. Today we have COD, and we make repeat buying so seamless that my customer support team calls the consumer and says, like, did you love the product, how far are you with the bottle, have you almost depleted, we have a special sale running, would you mind if I apply a 10% discount and send the same pack to you? And they say yes. That's it, done. The customer doesn't need to open the website, the customer doesn't need to go to Amazon, the customer doesn't need to pay the credit card,
Wonderful, man.
nothing. And they just all my team will place an order for them, that's it. It's a COD order, and it goes from the third party logistics to the consumer directly, and they pay the money. And the repeat buying has to be so seamless for the consumer without any effort. And if you engage with the customer, you can crack the code of repeat buying.
But wouldn't you have high return rates in this case? You know, COD is like very
No, you
deadly.
are getting the confirmation from customers. No, our COD return rates are less than 5%, because we don't
Right.
send a COD. See, it's about selling a product at an unreasonable price and being in a segment where what you show is not what you sell. In apparel, what you show is always not what you sell. I see something on Myntra or Ajio and I get something else, whether it's a color or whether it is whatever that it is, right?
Yeah, I
And
understand.
health, wellness, and beauty is not like that. What they see is what they will get. And also,
Right,
we are not so exorbitantly priced, and they know what they have to pay, and the customer is opting for it.
right. Interesting. Interesting. Pushkar, over to you.
So one point, Vishnu, when you said like creating a subscription-based D2C product, I believe VCs also love such companies because, first of all, of course, retention is quite high. It's easier to sell once you have acquired a customer. Now, I have two questions on this. One is which categories are better? Like if we say I'm an aspiring D2C founder, I want to create a D2C brand. How do I go about thinking about a category or a product saying, hey, this could be a good repeat, this could be a good subscription category? And second, how do I build it? Because as you said, as a founder, I should not be dependent on marketplaces then. I have to sell it through my own platform. So when do I make that shift? Like the whole
After
entire
you see, to answer the question on when you make the shift, it is after one hits a thousand number count in the general context, or once they have a 1 crore funding in their bank account, whether it's their own money or investors' money. Okay. And if you have to identify which products are repeat, it's very common. It's just as a consumer, look at a brand, look at a product, see for how long it will last, and how many people will buy it repeatedly. Okay. So in food, in nutrition, health, wellness, beauty, any makeup related products, or any of these things that I have mentioned about, people need things on a monthly basis. Okay. When I say food is not something we are touching at, but still food is monthly recurring. The cold pressed oil that they will use, the pastas and the kind of noodles that they will be making that people love, the sauces and whatever ketchups, etc., the other flour and new age chocolate making batter and things like that, right? and your ancillary food items like your honey, your turmeric, your um, you know spirulina supplement that you have to consume, your moringa powder, uh, anything of this sort. And there is so much YouTube yarn going around where people are telling use turmeric for your face pack, use this, that, and use multani mitti and all of these kinds of things, right? So and you have to work with these founders and send your Amazon link. They are all already a part of the Amazon Associates program. You pay them some money, they'll say order the multani mitti from this link, order the this thing from this link, and 1,000 people will see that video every month and follow it. You have to see what kind of, and use this special food to heal diabetes, right? Like use this special food, an ingredient with your mixture to get your hair color dark, right? And I am just throwing some of the ideas to identify and figure out, and once they use it and once they get a dark hair by applying that powder, they are going to buy your product again and again if you sell at a reasonable average price point and still have 20-30% margins. It's perfectly fine, right? And the content creator will continue to promote your brand. So this is subscription commerce. It is not that non-subscription commerce is waste. There is huge potential in non-subscription commerce. Things like consumer electronics, ticket value is 10,000 rupees when they buy a couple of stoves and your cooker and your induction stove, right? But a lifelong kind of a brand has created a massive business out of it. And consumer electronics is a massive segment, apparel is a massive segment. It is just that I am not doing it. I have huge respect for founders who have executed and who have successfully cracked these ventures. And a lot of what I am speaking about, even from a playbook perspective, even from a how a founder should address a brand perspective, is applicable to my own team. I got so many of my own team members here because it's only 2 months since I started this super cluster pie, and I have to translate my own thoughts and my own playbooks into reality in my team's execution and action. And that's a very long time and a long time taking process. So we just jumped in, we are doing the best. And because I've been in digital for the last 12 years, having handled 20 million in spends and more than 100 million in revenue, managing businesses for clients who had millions of customers, I draw a lot of experience and a lot of playbooks and a lot of things from the work that I have done there, and from what I've learned from the leadership teams that I've been a part of in the US and Canada. Right.
Guys, we have
Nice.
8 minutes more for the schedule time, and I guess Vishnu and all of us have commitments otherwise, right? So, Vishnu, you want to pick up a couple of questions which is coming up from the
Yes. So
Yeah.
one
USA?
Pushkar,
final
have we done all the questions that you wanted to ask? Maybe I'll do quick
kind of
answers if
like
there is anything.
I have a lot more questions, but I don't think we have time. So one
Yeah.
final question because I hand over to Dolores because Satiki has also asked a similar question.
Yeah.
Now the category you mentioned, subscription category. Now of course it's lucrative because people keep buying it all the time, every month, but it's also highly competitive. There are no entry barriers. Now, one is, of course, all of us understand product quality, but outside product quality, how do you create a moat? Like this question over there. How do you create a moat and how do you ensure customer loyalty? Any thoughts on that?
Yes. One, get enough reviews in the marketplaces that you are a part of. Go meet every single person you know of, ask them to buy a product and give a genuine review. And if you do a good product, they're going to give you a 4 star or a 5 star review. If you don't have enough reviews in the marketplace listing, you're not getting any orders. Your reviews is a moat. Number two, explain your product clearly that it's somewhat stands out from the competition. Say yours is the best forest honey out of the 10 people who are already selling, and for what reasons yours is the best forest honey. You show some pictures of guys who are really going into the forest and getting the honey and packing it in the box in the pictures below. So when customers see something like this, they'll believe it. And if four honey is selling for 250 rupees and you also selling for 250, I would buy your product and not the other four people who are not showing me how real is their real forest honey, right? So then third thing is build a brand identity. You can Google search what is brand identity, so that you use similar design language, you use similar messaging, you use certain kind of color to trigger and intrigue people to pay more attention to your brand and business, and invest in good photo shoots for your products. If you're having 5 products or 6 product images that will be there in any marketplaces, explain your value in one image, explain what are the ingredients and uniqueness in another image, and invest in that 5 pictures that you will post in the marketplaces. So these are all some of the ways that you can create a moat, and then start hustling, right? Like moat is about how many such YouTube influencers talking about a turmeric powder and a orange peel is promoting your link in Amazon versus your competitor's link in Amazon, right? And if you hustle, if you reach out to 100 of them and get them to promote, they're already a part of the Amazon affiliate program. You pay them 5,000, 10,000, they'll be more than happy. You find out which videos are growing significantly, make an Excel sheet, make a list of 100 videos, reach out to all of them in YouTube, and have them promote your product, which is already listed in Amazon. Then suddenly you have a moat, 100 people promoting your product, and others don't have it.
And that's gonna be there for a long time, right? I mean, people don't generally
Yes,
click
that's
on
gonna be
YouTube
there for
videos,
a
right?
long time. And if you are lucky, 4 or 5 of these videos will start going viral at some Diwali time or a Haldi time, right? When your
Right.
product is addressing that segment, and you will get that virality as a consequence of that, because that guy has, or in a wedding season, if you are doing a product that is related to wedding, right? So it could be anything.
Pushkar, it seems Vishnu is bent on in launching a turmeric or a haldi product. Like,
No, no, I am
and
not.
he's
That is
been
why
taking
I'm
that
talking
example
about
so
all
long.
of this. I am not,
All
because
right.
that's why I'm talking about all of this. Right?
Turmeric is
You,
the
you,
wellness thing.
you.
Yeah, I mean, I,
Yeah.
I've been here in North India for about 18 years now. So anything happens, my friend's mom calls me and says, "Beta, doodh mein haldi डाल के पिलो."
Hmm.
Whatever it is, doodh mein haldi. Haldi is like a wellness product in North India. So I mean, it's a big market if you're not planning, huh?
Haldi, spirulina, moringa, or ashwagandha, or any number of things that you talk about is all getting viral, and all the preachers and influencers are talking about it. So businesses could be built on top of it. If you can
Right.
communicate the moat, you will exist. There can be 1,000 brands that are doing a crore a month in India. It's not that
Right.
the space is so limited, right? So, and every brand identity will appeal to different people. Natural infusions is a natural way to solve hair loss, whereas there can be another brand which is a scientific, clinically studied way to solve hair loss. Then an
Right.
Ayurvedic way to solve hair loss will appeal to another audience. Then a cheap way to solve hair loss will appeal to another audience. A super premium way with dermatologist integrations and all to solve hair loss will appeal to another audience. So, or an influencer led way to solve hair loss is appealing to another audience. And hair fall is such a big
Of course.
problem, it can be addressed in 100 ways. Yeah.
Ask me about it.
Oh my
Anyways, right. Oh, you didn't realize it. Okay. Why do I
yeah,
get a compliment with man? Anyways,
yeah.
big deal. Okay, the joke is on me. So, Pushkar, you happy I pulled my own like this time, right? So, we have like quickly 2-3 minutes more. So, Vishnu, I really and see now I'm asking the digital marketer in you, not the D2C founder in you. When you're talking about health, wellness, and scalable products and all this stuff, right? Which is I'm more focusing on retention. That's what I understood, right? You have to make sure you launch the product and work on the products which are repeat buying is there, like a lot of repeat buying is involved in it, right? But what about products like a user has asked, I cannot say the name over here, a furniture D2C brand. How to it's just a one-off purchase, right? Um, and I've been seeing a lot of furniture. I'm not sure whether it's because of my click or view behavior, but on Instagram, I'm being followed and pursued by furniture brands,
See, I know
standard burst
furniture
and all this stuff.
D2C brands. In fact, I had such a struggle in buying a proper furniture for myself, which is why I'm still sitting in this very old chair that I bought 10, 15 years
Same
ago.
here.
Okay. Yeah. And the thing with furniture D2C is design and photography to get the transaction. But the real success of a furniture D2C is to figuring out the logistics and shipment, and the assembly at the customer's endpoint, and satisfaction. The problem with apparel and furniture like categories is, if you have more than 5% returns, you're screwed. But everybody has 10-20% returns. So only those who are funded, or only those who are so great at the product that they are doing, are surviving in these segments. But that means massive opportunity as well. If you can build a really superior quality product, uh, and then that works good, that your customers are loving, then you can build brands in these segments. Even though it's one time transaction, if you have good credibility in your listings and marketplaces, then that can shower sales in your
Right. I mean, I,
listings.
I was looking for a standing desk, and I could only find Rife, the product Rife over there, which has got this
Correct.
automation mechanism to do it, and they are like extremely expensive. Huh? Like I had to think,
Yeah, yeah,
and I'm still
40,000
thinking.
rupees, right? Like,
Yeah, I know.
so
I mean, for something which is very
that the
simple, huh?
desk
Like
that goes up and down, which everybody uses in America, where if I go to my brother sister's house, they're all in the US. They all have this fancy desks and chairs. It's cheaper in the US than India. I don't know for what reason nobody is
absolutely.
doing it here. Yeah,
Right. And but after work from home and having a cervical issue myself, I realized the
correct,
importance of good chair and good tables, and that is not
correct.
available. You're absolutely right. So, but
Yeah.
if it's not repeat, so then the margin should be very high comparatively, right, in these products.
Depending on the category, it need not be. As long as a founder can have 60% CM1 contribution margin one, then 40% is their COGS plus shipping. Then it is great. They can invest
Right.
enough money in marketing, growing, scaling, everything. So if it costs 2,000 rupees to import a table, you can sell it at 5,000. Fair enough,
Right.
right? It's not that they have to have 5 times 6 times margin, and after you pay for your Amazon marketplace listings, advertising, marketing, this and that, you will still have a 20% 25% profit. And even if not, through your growth phase you compromise that to do brand building, in a year or two you will have 15-20% profit. That's still great.
Plus the ticket size is very high, so naturally the profit is
Ticket
also in
size is
absolute
high,
numbers is
yes.
very high, right? So yeah, I
Correct.
guess we are at 12, and I remember you saying that you have a meeting at 12, right? So I'm sorry. Quickly, anything else, Pushkar, you want to touch base with, or shall we wrap it up today for here? What do you think?
I think maybe we should wrap it up. We can do another long session with Vishnu because I had so many questions to ask. We couldn't have time.
Yeah, maybe we will circle back a couple of weeks later with Vishnu
Yeah,
again,
yeah.
Absolutely.
just
Maybe I
before
can
like
do a question or two more now, and then we will circle back sometime later, Pushkar. So
Pushkar, he's not coming back. You see,
So
no,
okay,
I
so
will come back. I will love to. I
I'm just
love
kidding.
this.
I'm
I
just kidding. I'm
enjoyed
just kidding.
this
We
conversation.
try to
Yeah,
keep it very casual over here,
one
yeah, yeah.
final
It's
question. So just
yeah.
to summarize, you said first build PMF, number one. Number two, then get your customers on your website, have high retention. And third, build a moat through creating a brand identity. So if I were to take this conversation, I'll take these 3 points. Now, of
Perfect.
course, you spoke at length about retention, customer retention. So that is one key metric. Any other
That
key
is
metric?
my North Star metric.
Okay.
Only North Star metric that I follow is retention. And
Okay.
if I can get 50% of the customers buy my product again and again, I don't care about anything else. I'm willing to spend and get 0.3x ROI also. Okay.
Okay. So any but say for other guys who also want to track other metrics, anything else you would suggest them
Customer
outside?
acquisition cost, ROA, retention rate, the um, of course satisfaction of all the customers who are buying the product, and then average revenue per user or order. If they can cross sell, upsell, add a couple more products to guys who are buying this. That also we do on the phone caller. If somebody buys, let's say, hair serum, we tell, sir, do you know using the serum with our shampoo and conditioner is much more beneficial? And as a special token of gratitude, we are giving a 10% additional off. If you want to include that in this phone call, we will add it and send a COD shipping, right? So that ARPU is another thing. And lifetime value is a combination of your ARPU and category expansion led ARPU and retention led ARPU, right? Like, so
Mhm.
is what contributes to a lifetime value. So these things are all important. And get going, talk to customers, talk to content creators in YouTube, in your channel, in your segment, and invest your time and energy and persevere. The first 1 year will be very difficult. It was difficult for me after being a third time founder, right? So then the next 1 year is also going to be difficult for me because the aspirations that I have is at that level, right? And I'm willing to go through the journey. I've enjoyed this. I've been an entrepreneur all my life from my age 13, and now I'm 28. So spent more than half my life in business while only being 28. It got an early start for me. So these are some of the metrics, and don't confuse yourself also with too much metrics and too much knowledge. Too much knowledge actually leads one to knowledge clutter, and people start doing all kinds of things at once. Even I'm an example for that. But I've observed and seen people who do one thing really well at a time succeed significantly more and bigger and better than founders who do so many things at once. So, as a founder starting up or in your journey, if you focus more, then you will get great results. And these metrics are good enough. If you don't know anything as a part of this also, you can go to Google and search and learn this and pick it up along the way.
Awesome. I think that is great advice.
Awesome.
Like, one thing at a time. Final thoughts, Dulos?
Yes.
Anything you would like to add?
Very interesting session. We'll have to do that. I mean, I'm confused, Pushka. How will you manage? Even Prakriti, you again want to do a couple of more sessions because we had to deep dive into it, and we are like just scratch the surface, right? You need
Yeah, I know.
execution as
Let
well.
us do one more session in a couple of weeks or so, and I would love to do that.
Yeah,
We will
we have
deep
got a
dive
couple of
into.
people. Yeah, we've got a couple of
Uh,
people aligned. So how it works, basically, we just have a lot of people aligned for the next few weeks. So we'll reshuffle it once more and we'll look into it and let's see if we can do one. And maybe we'll do some closed door discussions as well, where people can actually talk and interact and all. We're trying to create some ideas around it. But anyways, that's for the future. But thank you very much, Vishnu. I mean, being a serial entrepreneur and leading a lot of team, right? And your team is based out of Coimbatore, right?
No, my team is now based all across India. So I still have half of my team working for some clients and the remaining half of the team who's working on the D2C aspect. So slowly, I'm personally starting to focus more on the D2C side as I have set up this house of brands to pick up smaller brands and then scale them and also launch micro niche brands and grow them. And all of you can take Goli Nutrition as an example. So the product that I have here, you can visit their website, their social media pages, look into their ads and their transparency within Facebook to understand how they have scaled to $1 billion ARR with more than 95% of the revenue generated from two SKUs within 24 months of launch. Okay.
Ooh, wow.
Yeah.
Yeah.
Wow. Pushkar is, I mean, I'm sure, pretty sure he's already started searching for the company right now. Anyway, that's very interesting insight. Yeah,
Yeah. Yeah.
that's a
In
nice
of
tip to
course in
start.
America, you go and follow these brands, these kind of brands who are scaling, you will definitely learn a thing or two about what they've done that you can apply
Absolutely.
on your brand. Yeah.
Absolutely. I mean, Western culture is always a little ahead when it comes to adoption of technologies and this kind of market strategies, right? Anyways, thank you very much, Vishnu. Thank you very much for the time. It was great talking to you as always. We should do this again. And thanks, Pushka, for posting it. And you guys, you can still ask comments and network over here in this LinkedIn page if you're not wrong. We have already shared the link for Vishnu's, uh,
Yeah, we did that.
Excel sheet. Yeah, Excel sheet already in the comments. You can still see it. Even when you scroll through the
And
video
you can
after the
connect me
recording.
with in LinkedIn. I would love to
Yeah,
give back and do whatever I can in the spare time
absolutely.
that I get to support the journeys of you. I wish every one of you who are here all the best in their journeys. Whether you are into D2C or you are a D2C enabler or marketer or a investor. So let us together create massive success out of India, serving the Indian consumers in the next 4 5 years, and of course aim and try to take the Indian brands global as well.
Wonderful thought, man. Wonderful thought. Thank
Thank
you
you,
very much
Pushkar.
again.
Thank
Thanks,
you,
guys.
Dilos, for the opportunity. Look forward to
All right.
connecting back in a couple of weeks. Bye bye.
And guys, everyone, bye.